Your brand new iPhone deserves the best protection, and the iLune 3-pack screen protector plus 3-pack camera lens protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Welcome to Bitcoin Bulletin. I'm your host, Helene. Today we're diving into a fascinating story about Bitcoin ETFs and their potential for huge inflows in the second quarter. Despite the market's sluggish performance, these spot Bitcoin exchange-traded funds saw over $1 billion in net flows in Q1 alone. Bitcoin bulls are touting that even if prices don't recover, institutional investors are recognizing global adoption momentum sparked by the Trump administration's embrace of Bitcoin. Financial advisors and professional investors see this as an opportunity to start or increase allocations to Bitcoin, driven by its potential role as a safe haven asset during economic uncertainty. But here's the thing. These ETF inflows might not necessarily reflect investor interest in buying the dip. You see, there's something called a basis trade or cash and carry, where institutional players buy the spot Bitcoin ETF while shorting CME Bitcoin futures, picking up yield without exposure to price movement. And that yield was well into double digits, which collapsed recently. Now, some analysts are warning that arbitrage-related ETF inflows might dry up if this yield doesn't bounce back. But others like Nate Jarosai, president of the ETF store, say it's still early days for adoption, and as these groups grow more comfortable allocating to Bitcoin, it should provide a meaningful tailwind for inflows throughout the rest of the year. According to a recent survey, 57% of advisors plan on increasing their allocations into crypto ETFs this year, as crypto has lost its reputational risk attribute among advisors. And with BlackRock CEO Larry Fink noting that most money still comes from retail investors, the more favorable regulatory stance and government potential allocation could soon shift the ratio significantly. So what does this mean for Bitcoin? David Seymour, CEO of Wave Digital Assets, says if we see continued rate cut expectations, signs of economic uncertainty, or deepening fears of a potential recession in the U.S., Bitcoin's role as digital gold will likely support additional inflows. And while some short-term traders might rotate out, long-term players will keep inflows strong, especially as institutional adoption takes off. That's it for today, folks. Stay informed, stay ahead with Bitcoin Bulletin.